Hey folks, welcome back to this edition of Ben's Bits. We're continuing our series from last week's video about avoiding herd mentality, specifically how it affects investing for what matters most to you and how it affects the growth of your portfolio. And today we're going to be covering systems and how the intent behind it was hijacked and how it's now used more of a sales hook. Now, I certainly don't want to insult your intelligence, but I do need to specifically identify what we're going to be addressing over the next few moments. Because systems at face value are integral to planning how you're going to approach a certain way of investing, or what strategies you're going to employ, or what the contingency plan itself is if a catastrophic event should happen. The idea of how systems were hijacked and what we've been hearing from investors is that there are companies that are saying, here's a system that you can follow, and it's our blueprint for making money. So the intent behind the system is to sell you something more. Now, before we go any further, there's a stark difference in actually being shown a strategic tactic that you can employ that works and having more advanced strategies or techniques to help support that. Now, that's not what we're talking about. As direct as I'm willing to be, we have been hearing that there are educational companies out there that teach a system for acquiring a rental, keeping it for a few years, and then offloading it to the next investor before the repairs kick in. Or even worse, in the rehab space, you have two people who go in and one keeps the seller busy while the other goes and creates distress to lower the price. And we're not going to call companies out because that's not how we do business. If you like what they say and it fits into your investing for what matters most to you, then by all means, do what you feel is comfortable and best for you, best for your portfolio, best for your loved ones. But there is a saying that's true, whether you believe it or not, that what goes around comes around. And quite frankly, those types of investors get what they deserve. But that's enough of that. Let's talk about using a system of maximizing cash flow and growth at the same time. Now, you may have heard this as capital velocity. It has other names as well, but you get the idea. You're essentially augmenting cash flow to grow the capital aspect of your portfolio each month, which is the most important aspect until you reach the wealth building stage. And this means you're keeping more of your money at play while reducing expenses. And we've discussed this idea in the past, but once you've taken care of the monthly cash flow, that allows you to be truly independent of financial ties. Now you can grow the portfolio into using other investment vehicles. And by doing this, you're reinforcing true diversification. Now, we use a model that most of you know. It's the acronym STEP, for which stands for scalability, time, efficiency, and predictability. Now, we'll discuss how we implement it in another video, but when you apply it to this topic, you can see how most investors are fighting themselves because they're not employing a true system. They're following a checklist, and a checklist isn't a system. So that's it for this edition of Ben's Bits. Join us next week as we reinforce this discussion with the concept of bond laddering and how, when applied correctly, you can grow your portfolio much faster. So thanks for watching, and we'll see you next time.